Hey guys, Stock Saturday, and it's been another remarkably good week. Down to sort of crypto side mainly, gold and silver as well, sort of providing some of that gain. Up 11.5% for the week, about 115,000. So pretty surprising compared to the S&P 0.92%. It's had a new all-time high. Has had a pretty good week off the back of the rate cut, as you can see midweek, and Nasdaq sort of similar reasons during the week, but faring a little better, 1.85%. But yes, I've had another outperformy week. The cash is still there. Probably be withdrawing that in the next week because it is finally that time. And yeah, the sort of big stocks in this side of the portfolio sort of having a reasonably good week. Semiconductor side sort of improving slightly. Taiwan Semi sort of pushing to new highs for me, I believe. Broadcom not quite so, but still doing well. Applied Materials sort of doing a pretty well for this week, and yeah, not a huge amount of change in the others, to be honest. Not had any buys in here as well, although I probably will be in the coming week, as you can see sort of from the sales elsewhere in a bit. But yeah, let's have a look at some of the news. Just sort of one bit of news on my sort of larger holdings. The Hive Digital closed the acquisition of their data center that I announced a little while back. Only a 7.2 megawatt data center, which is sort of apparently actually quite large compared to what people have sort of been building, in the last 10 years, but compared to sort of what we're seeing from other people, 50 megawatts from herein, and sort of 300 megawatt deals that people like Core Scientific and others are doing. TerraWolf, so 7.2, not exactly huge, but it is sort of still a relatively small part of their business. You can sort of see it's more of a normal building than the sort of $10 billion centers that big tech are building. But yeah, they keep sort of saying this is strong for sort of sovereign AI, government getting involved. Government want it on their own turf rather than using sort of US data centers. So yeah, could be positive for Hive. So digging into the rate cut announcement, obviously every other announcement we get a summary of economic projections and sort of more of a reason why they cut, I suppose, and their projections going forward. They do sort of stress quite strongly that this isn't a plan. This is just the sort of median and projections of what people have expected, what they say they're expecting to happen. They're not saying we will do this in 2025, 2026. This is just what we're all thinking and then summarized. But interesting to sort of see where they've come from in the June version 3 months ago. So they've increased their forecast for GDP slightly for this year and the next 2 years as well, and sort of longer run keeping that the same. They've slightly decreased the unemployment rate, even though it's been going up. They're saying it will peak this year at 4.5% and then come down 0.1% every year to a sort of floor of 4.2. That seems incredibly sort of linear and best case scenario. I've seen sort of some people this weekend potentially saying that this is a little bit devious. You sort of report unemployment coming down, and then if it sort of rises up slightly, as you might expect it to, especially with AI, then that sort of gives them more room to cut. So it's they're sort of saying we're data driven and we can't cut to what Trump wants to unless we have the data there. But if you sort of sandbag your projections almost, say things are going to be really, really rosy, with this sort of being an incredibly low historic unemployment rate, then if it rises, you can say, oh, things are bad, things are worse than we thought, we better cut. So could be them sort of being a little bit more accommodating, but could be reading a little too much into it. They have increased their inflation projections. They're sort of saying 3% still, 3.1% on core PCE. But next year they were forecasting a relatively sharp drop, I suppose, to 2.4% on both. They're now saying 2.6, and then keeping the sort of again sharp drop back down to the normal 2%. Somebody did point out in the press conference that they've been sort of saying things are going to normalise within 2 years, sort of since COVID started, really, and sort of even before then, where they were also having a few issues and wanting to normalise things, and it's always sort of in 2 years things will be much, much better, and then, you know, in a year they're saying in another 2 years things will be much, much better. And he sort of, Powell, just completely brushed this off and said, well, that is just our process. We can't really say any more than that. So yeah, that was very interesting. They have priced in one more rate cut. You see, come down from 3.9%, so that's the midpoint basically. They were at 4% or 2 cuts this year back in June. They're now saying 3.75% basically, so 3 cuts. Part of this is being pulled down by Steve Moran, their new guy. But yeah, they're projecting then just 1 cut next year, which is unusual. I think they sort of would probably end up with more than that, especially as Powell is leaving next year and potentially a sort of much more accommodating person to President Trump coming in. And then, yeah, 3.1%, 3.1%, 3% in the sort of longer run. So, yeah, a little bit unusual. And my sort of favourite thing to look at is the wild dot plot. It has got a little bit less wild in this one, certainly. You were sort of getting, you know, dots all over the place. You had one guy, I think, even next year at like 5.5%, not so long ago. They have sort of come into a little bit of a tighter range, but it's still, you know, 1.5% spread between all of them for every year. Interesting for this year, you sort of have pretty much everyone, or the majority, tied in at this sort of 3.75% rate. So 3 cuts, you know, the cut that we just had, and 2 more cuts at the next 2 meetings, 1 in each meeting. But the sort of outliers, still very interesting. You have this one person here, is saying 4.5%, so that would actually be 1 hike over the next 2 meetings, which, yeah, can't see that happening unless sort of inflation spiked wildly out of control in the next couple of months. Not really sure what they're getting at. Maybe they hadn't sort of baked in that they just cut. You could make a case for them cutting at that meeting and then leaving it, but you know, that dot is 1 point higher, or 0.25% higher than that even. And then you have, as I say, Stephen Moran, the new guy, who's saying they will cut 5 more times over the next 2 meetings. So he's somewhat distorting the average, but then I suppose comes in somewhat in line next year because he is one of these. Guessing that's him in 2027. But yeah, they're sort of expecting, you know, 3% or so over the long term. So yeah, very interesting. So getting back to earnings, it's been a little while since I sort of looked at some of my smaller holdings. Sort of been concentrating on what has been moving the portfolio somewhat. But yeah, some of these sort of smaller holdings are ones that I may be looking to add to as I sort of sell some of the crypto and gold and silver holdings. Sort of going for a little bit more safety, more of a sort of commodities, you know, tack, and yeah, ingredient could be one of them. I do like what they're doing. Obviously, the numbers aren't the explosive growth that you'll see elsewhere. You saw net revenue in the second quarter compared to last year down 2%. Year to date, it is down 3%. So Q1 and Q2. Adjusted operating income up 1% from this quarter last year. Up 12% for the year to date. So yeah, Q1 was a little bit better, and you can see sort of fairly small, low single digits on the breakdown. Texture and healthful solutions. So this is their sort of way of trying to dress up chemicals that go into food, basically, or additives that go into food. Your gums and your nitrates and all sorts of things. Having a look through their product portfolio. They're showing some positivity over time. Gross margins sort of increasing from the 2023 levels, sort of low 20% to 26%. That's a new high compared to Q3 2024's 25.6%. They're talking about sort of cost savings, of course, growth in international regions, which would be nice, and yeah, the sort of they noted -2% change, 7% change in gross profit, which is good. So revenue lowering, but profits increasing. Always good to see. And operating income 13% up for that quarter. Although, yeah, there is some adjustments for this. So Q2 last year wasn't particularly good, but that was sort of some non-cash items. So on an adjusted basis, it is very much the same. But I'm not buying these stocks for explosive growth. It's more as a sort of, I wouldn't say safety net, because they obviously can drop. I had FMC, not FOMC. FMC dropped sort of 35% in one quarterly earnings. So yeah, there's no safety in the stock itself, but going for more of a sort of essentials, essential stock. Like, we don't need Bitcoin mining, of course. We do need food. Yeah, they note last year here there was some adjustments that you really need to make, impairment charges and tax items and bits and pieces that are not ongoing, recurring charges. So really, 287 adjusted EPS is basically flat on last year. So I would see that as fair enough, and expecting reasonably slow but steady growth moving forward. So yeah, not too bad. And they're given a reasonably strong outlook for Q3 and Q4 for the full year. Flat revenue for the year, not the worst thing. Adjusted operating income up mid-single digits, so that's quite nice. Yeah, the adjusted EPS $11.10 to $11.60. So for a sort of $125 stock ish, depending on the day, you're looking at sort of 12, 13 times earnings, more on the sort of 12 times, which is pretty solid, reasonably good value, I would say. Low margin, where all three of my sort of food related companies are sort of lower margin than my other holdings, but that's just the nature with this sort of industry. But yeah, look reasonably good value. So looking at CF Industries, the sort of raw material needed to grow anything, pretty much. They note they are the world's largest ammonia producer, and yeah, some of these numbers looking pretty strong. They are the highest margin of my three sort of food related companies, which is pretty strong. Although, you know, profitability, adjusted EBITDA is very close to this quarter last year. Some quite sort of large price swings though, increase in price, but you know, reduction in gas costs and other costs. A little bit of a gain on emission credits and things, but yeah, overall things haven't really changed all that much. On the first half, including Q1, things are up quite a bit more, less on the sort of other costs weighing them down. So yeah, looking pretty good. They're noting free cash flow sort of has potentially bottomed. It's sort of been coming down over this somewhat commodities bear market, or sort of soft commodities bear market, that is, at least. Yeah, so over 2022, 3 and 4, it's potentially bottomed. You can sort of see, this is the left-hand side here. The last 12 months, so Q3 of 2024 to Q2 2025 has been better than the whole of 2024, up sort of, what is that, 300 million or so. Yeah, 1.729 billion to 1.445. So yeah, very nice. And they're using an enormous amount of this free cash flow to buy back shares, basically, while they sort of think things are somewhat cheap. You sort of see 208 million shares in 2021, all the way down to 162 million shares. So yeah, just holding the stock, you're without buying any more, your stake in the company increases. So that's always nice. And the other thing they are spending rather a lot of their cash flow on is a low carbon ammonia production facility, joint venture, sort of really kicking off in 2027, with 3.7 billion total capex planned, and sort of 35% or 65% of that coming in 2027 and 28. So yeah, that should be very strong going forward. I do think the sort of need for just basic food and farming is going to increase over the years, even if some of it may be sort of more autonomous farming. You still need the chemicals, unless sort of we have some significant breakthroughs. Yeah, they're noting here, over the sort of next 5-year period, I think they're expecting 12 to 14 million metric tons increase of ammonia, and there's some sort of construction underway, and their sort of joint venture with Blue Point will provide some of that, but you're getting European plants closing. And yeah, this will lead to sort of 5 to 6 million metric tons coming online by 2029, with a sort of 7 to 8 million shortfall. So you'd expect prices to sort of increase to try and get what they can, and that should be good for CF. And then FMC, my one that sort of went very badly a couple of quarters ago and lost 35%. They are obviously still looking somewhat weak. I think I mentioned that when they dropped, that this wasn't going to be just a sort of 1-quarter adjustment. It was going to be something that carried on for a little while. They sort of worked through a sort of brought forward tax bill, I think it was. So yeah, EPS at 53 cents compared to $2.35 this time last year. Adjusted EPS at sort of 69 cents compared to 63 cents, so that is up 10%. Where sort of GAAP EPS down 77%. This was a sort of tax gain last year, so it was sort of reporting like a PE of 3 or 4, and people were saying it's amazing value, and it's like, no, that was a tax, one-time tax gain that does go into net profit, but it's not really net profit. So yeah, if you look at sort of adjusted numbers or take that out, then things look a little bit more normal, basically. But yeah, other than that, things looking reasonably okay. Sort of $67 million on $1 billion of revenue. So as I say, these are rather low margin companies. 19.7% adjusted EBITDA, so that's adjusted earnings. So 19.7%, not the highest, but it's a low margin industry, is food and chemicals. And they note the change in adjusted EBITDA has come from price decreasing, which is unfortunate, but costs decreasing by sort of nearly double the amount. So that's helped things out a great deal. And then a bit of loss from FX adjustments. So you've had an enormous change in the dollar sort of in recent months. So yeah. And you see by region, North America is down 5%, Latin America 1% up year on year, 5% if you exclude the FX adjustments, and yeah, Asia down 17%, and Europe, Middle East and Africa up 29%, with sort of adjustments to FX as well. I think we're going to continue seeing the adjustments for FX depending on sort of which currency. It's sort of Latin America is better off excluding FX, and Europe, Middle East and Africa is worse off. So yeah, FX, very hot topic at the moment. And yeah, basically excluding the sort of tax adjustment nonsense, adjusted EBITDA 1% year on year expected for the rest of this year, and flat earnings per share. They do have their sort of issues with patents expiring and sort of what they're going to do in the future. They seem to have a pretty solid plan from the looks of it, investing in other areas and diversifying. So yeah, I think things look pretty good. So just quickly looking at the rest of the economic news, we had sort of mildly better economic. So just looking at some of the rest of the economic news, aside from FOMC this week, not a huge amount. Job numbers and wages in the UK, so not really having any impact. Retail sales in the US, 0.7%, which is pretty good. Last month's revised up slightly as well. So yeah, they were very positive about that. August inflation numbers for the UK, pretty much in line. Core CPI slightly lower than they say worse. That's is better to be lower, of course. Investing.com sort of sometimes gets a bit funny with their colours and what's better and what's worse. But yeah, 3.8% last month, down to 3.6 on core CPI is always good. Headline stayed exactly the same, so I guess there's some food and energy sort of adjustments in there. And then yeah, we had FOMC and everything. Thursday we actually had the Bank of England meeting as well. Not really sort of talked about a huge amount, although it was sort of fairly expected they would hold. It was expected to be 8-1 in favour of holding. It was actually 7-2. Two people voted for a cut, but obviously it didn't happen. And then yeah, job numbers in the US sort of looking, admittedly, straight after a cut, slightly better than expected, but yeah, things are sort of still not ideal. Some small adjustments there. And yeah, that was pretty much it. Retail sales in the UK actually looking a reasonable amount better than forecast, although sort of last month's figures revised slightly worse. But yeah, it was basically all US interest rates this week. So portfolio-wise, the ISA has actually been sort of very strong this week. Seen I think over 30 grand of gain off the back of Coeur Mining sort of increasing, $17.42 now. Pretty crazy. CleanSpark has actually been coming back to life as well, with sort of Bitcoin increasing slightly. Obviously, they are an all-in Bitcoin miner as opposed to the sort of hybrid miners in AI. So, yeah, Bitcoin increasing has helped them a little, although difficulty still going up. So, yeah, really need a substantial gain in Bitcoin for them. Fresnillo, £22.80 with silver sort of moving up fairly strongly. Riot Platforms as well coming back into life. They're sort of in between Herein and CleanSpark, I suppose, in terms of their mix of AI and Bitcoin. Herein obviously has been incredibly strong, $38.64. I'm sort of been selling the option side. Probably ought to start thinking about selling some of these in the ISA side as well. It's sort of tempting to try and just get a bit more greedy and wait a little longer in the ISA since it's all tax free. Equinox has sort of barely moved this week, really. Similarly with Hive, I think he's down for the week. I did make one small addition, just topping up my Vici properties. That was sort of down at £700 or so. So I decided to up that to the rest of my REITs, sort of all about £2,500. So yeah, unsure as to sort of what to do with the rest of this 4,000 for now. I will sort of try and weigh it up and make a decision. Obviously, if I start selling a great deal of some of these gold and silver and crypto positions, then I will have to sort of make some more serious decisions. And looking at the little interactive brokers ISA, not a huge amount of movement in here, to be honest. Pan American sort of seeing a reasonably good gain on Friday with gold and silver going up. KGHM sort of barely moving. I mean, it's tempting to go a little bit more KGHM if things keep improving and their price doesn't, because 43 million ounces of silver with silver at $43 now. Quite a coincidence. They should be reducing costs, I suppose, rather than sort of making more money on a top line basis, because copper sort of still lagging a little bit. But yeah, their costs should be coming down and profit increasing. So it is rather tempting, even though it is becoming a big position. But I think I could make it a big position. And on the option side, obviously some rather large changes in here. I sold another 40 contracts. I think it was at 200 iron contracts last week. Sold 40 of those, and the total position has increased in value. So yeah, it's getting a little bit ridiculous. An average of 48 times my money on there, 4,873%. So yeah, a little bit ridiculous. I will sort of continue selling into the gain because, well, mainly because it's getting towards my sort of target prices that I had initially, assuming Bitcoin would be at sort of $150,000 to $180,000. It's not. It's 115,000, but price is going there regardless due to the AI side. So I'm a little bit unsure as to whether it'll just keep rocketing up. If we get a rise in Bitcoin, you could see a bit of a fallback in the AI side. And sort of as I noted before, the Bitcoin miners did peak well before the Bitcoin peak back in 2021. So yeah, always sort of mindful that we could see that, and 48 times my money. I think don't get sort of too greedy. Obviously, I'm not selling the entire position. I think I had 320 or 360 contracts, so yeah, still got half the position left, and yeah, just carry on sort of averaging out, I suppose. Equinox has risen slightly, not a huge amount of change there. Obviously, Equinox do basically no silver at all, and it's sort of silver that is getting a lot of fairly large amount of the talk at the moment. Yeah, elsewhere, Hive has actually fallen for the week, even though sort of Bitcoin doing quite well. I think Bitcoin's actually down, about $1,500 on the week. So, yeah, Hive don't like that at all. Kua Mining, as I say, with silver doing really well, they have increased quite a bit, 59,000 now. I didn't sell any, but I probably should be and may do so this coming week. Riot increasing as well on the back of sort of AI and iron increasing as well. I'm only down to 20% loss on this now. This was sort of at 50, 60, I think even 70% down at one point. Still a bit of a lofty target. Some of the is 1740 stock price, I believe, and some of my contracts are for $35, so it's a long way to go on that. But yeah, I think if we start getting close to that, I would probably be selling these, because it's one of my less favoured stocks. Cypher, on the other hand, have just been absolutely smashing it. They haven't got an AI deal yet, but there sounds like there's potential for one almost imminently. And yeah, so they're up sort of, this was a little speculative buy really, and now they're up 17x. So yeah, it's very nice. Would probably be selling, I would certainly be selling the majority of this on any sort of big pump on an AI deal. But yeah, we'll see. And a new holding, I've been spending some of this cash that I've been, accumulating by selling iron and some of the others. And yeah, B2 Gold, sort of in a similar position to Equinox, really. Sort of been building a new mine and sort of had some headwinds over the last sort of year or two, negative net income. So yeah, people have not been loving them all that much. I thought Equinox was pretty good value. B2 Gold seemed to be sort of basically about 3 months behind the path of Equinox, potentially. Sort of should now be coming into profitable quarters, where sort of Equinox are now in profitable quarters and are paying off their debt. B2 Gold actually don't have that much debt, but are sort of hopefully with their new mine opening getting back to profitable quarters. So I thought that looked quite good. Stock's at sort of $4.45, and I bought some $7.50 strikes for January 2027. I think 150 contracts for January 2027 and 150 contracts for January 2028. So that gives me 2 years and 4 months to go. So they are very, very long term. I can see quite a lot of potential in those, really, for 10 grand. It sounds ridiculous to say, but I think they could potentially be a 10x or more. Yeah, sounds sort of a little silly to talk about now, but you can see sort of what's happened on some of these others. 48x, 25x, 25x on a gold and silver miner. So 10x in 2.5 years, I think is very much possible. And yeah, HIMAX sort of increasing ever so slightly. CleanSpark was quite funny. This was sort of £100 last week, and the rise in CleanSpark over the last week has pushed this almost to break even. So yeah, we'll have to see. These expire in 2 months, November time. So we'll have to see. $20 strike, and the stock's at 13. So a long way to go. People are clearly expecting something. But yeah, 87,000 in cash. I have put in an order to withdraw 70 of this, so that'll most likely be going into Trading212 for the most part. So yeah, interesting. I have to. Well, I do want to withdraw some of that cash for the mortgage. So yeah, one way or another, the portfolio will probably be about 70,000 down or so at some point. But yeah, looking to make some big buys. So leave your thoughts in the comments below and like and subscribe. See you soon.